Ladies and gentlemen, good day and welcome to Finolex Industries Q1 FY26 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arun Baid from ICICI Securities. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all to the Q1 FY26 result Concall of Finolex Industries. From the management side, we have Mr. Saurabh Dhanurkar, Managing Director, and Mr. Chandan Verma, CFO. Now I hand the call over to Mr. Dhanurkar. Over to you, sir.
Thanks, Arun. Good afternoon, ladies and gentlemen. Welcome to the investor conference call for Q1 FY25 earnings. We thank you all for your continued support and interest in Finolex Industries. FI has registered a modest growth in pipes and fittings volume in spite of overall weak demand scenario during the quarter. The operating performance of the company is muted mainly due to weaker realization on account of volatility in PVC prices. The company's endeavor to grow in non-agri segment is ongoing. Let me now take you through some of the performance indicators. Pipes and fittings volume increased by 2% to 92,129 metric tons against 90,620 metric tons in Q1 FY25. This was in spite of weak demand scenario overall. Total income from operations was rupees 1,043 crores, down 9% against rupees 1140 crores in Q1 FY25 due to weaker sales realizations. EBITDA stood at rupees 94 crores against rupees 207 crores in Q1 FY25. PAT stood at rupees 97 crores against PAT of rupees 505 crores, which was including an exceptional gain of rupees 339 crores in Q1 FY25. From current year, we have decided to evaluate the company's performance as a single entity rather than splitting the performance between the two segments, PVC resin and pipes and fittings as done earlier. This is because PVC resin is no more being sold in the market and it's almost entirely for captive consumption. So as a management, we do not really look at PVC resin business, PVC resin segment as a separate business. The company continues to have a strong balance sheet with a net cash surplus of around rupees 2,533 crores as on 30th June 25 compared to rupees 2,401 crores in the corresponding previous year's quarter. On a personal level, as many of you are aware, I stepped in from my role as a non-executive director on the board to the role of managing director in November 2024. This was meant to be a transitory position till we find a new MD after Mr. Ajit Venkatraman stepped out. I am pleased to share that our board of directors have now approved a worthy successor for this role, and he will be joining soon. Of course, I will continue to be associated with the company in an advisory capacity, and before I formally hand over to the new incumbent, I will, and even after that, I will be continuing to mentor him and be involved in the strategic decisions of the company. Let me now leave the floor open for questions. I have with me Mr. Chandan Verma, our CFO, who will take the questions regarding the numbers. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Shravan S. from Dolat Capital. Please go ahead.
Hi, sir. Thank you, sir, A couple of questions. So first, on the volume front, so obviously, this quarter was very, very muted, 1.7% kind of a growth. So just wanted to understand, last time I think we have spoken that April and May was very good, and once the rain has started at the end of the May or start of the June, then only demand got impacted. So just wondering, was the June so bad that the for the quarter we just had only 1.7% growth, and now how one can look at have this particularly July until now August, have we seen the improvement in demand? Because I think we last time we were talking about kind of a double digit volume growth for full year. So how one can look at?
So as you rightly said, because of the early onset of monsoon towards I think 22nd May or something, then onwards the demand came down, and June, yes, was very subdued as compared to the June in the corresponding quarter last year. But overall, to answer second part of your question, with July we have picked up despite the monsoon continuing, and as we talk today, we are at high single-digit growth. So it's not as low as the first quarter. We have picked up in July, and we are as a policy, though we don't believe in giving guidance of accurate numbers, but yes, this trend of at least high single digit will definitely continue. Hopefully, we will cross the double-digit growth.
So for that, so 2-3 aspects. First is in terms of this 1.7%, how was our agri, non-agri share? And if you also can help us in terms of the growth for agri, non-agri in this quarter.
So, Shravan, in terms of agri and non-agri, both have in tandem. Agri has also grown roughly around 2%, and non-agri has also roughly grown around 2%. So both agri and non-agri, more or less, we have the similar growth numbers. And in terms of volume split, generally we don't give. It's roughly around 70-30 ratio that we are having between agri and non-agri, between current quarter also, and the same ratio was there in the corresponding quarter of the last year as well.
Okay, got it. And now, sir, in terms of margin, so pricing, a bit question, despite our pricing was, if I look at QOQ was 1.2% down realization, but if I look at FY25, it is 4.9%. So let's say even if we are saying a high single digit growth for this year, how one can look at, so on the pricing front, because net ultimately, how one can look at the revenue for this year?
So revenue, Shravan, it all depends upon how the prices of PVC is going to remain over the period to come, right? So we have been seeing the declining trend of PVC prices from the last quarter, till the current quarter. So this will more or less the price guidance will come how it is going to remain over the period of time. PVC prices, resin prices.
Yeah, but. Yeah, because now even the ADD, whenever it will come, and BIS has also been postponed to December. So in that scenario, do we see the pricing to pick up at least in next 2-3 months, or maybe it would be October, November onwards one can look at?
Shravan, to answer your first question about ADD, we are expecting the recommendation to go through within this month, but you are right, by the time the finance department comes out with the final circular, it will be maybe October or so. So after that, definitely there will be an increase in the domestic prices. Internationally, as you know, it's all a volatile situation. You don't know which way oil will move, it's going up and down, the tariffs. So very difficult to predict what the PVC resin prices will be, and obviously correspondingly that they will reflect in the pipes price.
Yeah. So on the EBITDA margin front, so this quarter was a 9%. I think normally we talk about kind of a 12% kind of a margin. So how one can look at, can we start seeing a double digit plus kind of a EBITDA margin from Q2 onwards, or till the time the prices will come up, then only one can start looking from third quarter onwards kind of a double-digit EBITDA margin?
Yeah. So Shravan, you have seen in the last quarter also, June 24 quarter also, we have registered a EBITDA margin of 18%. But because of this declining trend, pricing trend, the EBITDA margin has got down drastically. If the price will remain stable, definitely we are expecting a 12 higher double-digit EBITDA margin for the year as a whole.
Okay. Last, sir, on the capacity, we were saying that we will be adding a 50,000 ton in 1H FY26. So have we added anything? If not, by September, are we adding this 50,000 ton? And is there any plan in terms of the greenfield expansion or brownfield expansion?
So this 50,000 tons, Shravan, that has been the 25,000 tons came in the last quarter of the last financial year, and 25,000 tons right now is almost completely implemented. So definitely by September everything will be up and running. So once we come back from monsoon, we will have the advantage of this 50,000 tons. As on the greenfield expansion, there is still no decision of a new location, because the next phase of expansion, which we are already talking about internally, working on internally, though it's not approved by the board yet, will still most probably happen at the existing locations, because both at Ratnagiri and Masar we have adequate infrastructure to handle more capacity. We see growing demand still around the markets around these plants. So the next phase of expansion definitely will come at the existing plants. Greenfield capacity announcement, I think probably will take some time, not in this quarter.
Okay. Thank you and all the best, sir.
Thank you.
Thank you, Shravan.
Thank you. The next question comes from the line of Sneha from Nuvama Wealth. Please go ahead.
Hi, sir. Good evening, and thanks a lot for the opportunity. Just I wanted to understand on a structural level, given now that you're an integrated player and you would be reporting, your margins on a consolidated basis, where can we actually see the margins, on a structural level, leaving apart the PVC ups and, downs, which we've seen particularly in last 1 or 2 years?
No, as I said in the beginning, more and more we are looking at ourselves as a pipes and fittings player with a backward integration. Earlier, when we set up the PVC resin plant, that also was a move towards backward integration, but we put up a capacity more than what we were consuming. So we were almost 50% of our resin at one time we were selling, and slowly now that has come down to almost zero, maybe 1,000 or 2,000 tons we sell outside specialty grade. So basically it's all for captive consumption. So our margins obviously would remain, whether we publish segment-wise or whether we publish as a whole. This is basically an accounting treatment, and we have been advised for the last, in fact, year also, that slowly you have to start thinking of looking at this whole thing as one unit, because there is zero sale practically in the market. So whatever were the volatility of the EDC ethylene prices for the PVC resin business, those will continue, but there's nothing structurally different in our operations now. So what was happening till last year, the same thing will happen. We will continue to be benefited by low EDC prices, and we will continue to be impacted if the delta between PVC and EDC goes down. Only thing, as far as we are concerned, we look at ourselves purely as a pipes player now, not as a petrochemical player. So that is why this change in accounting method.
Understood. Could you help us with the spreads this particular quarter, PVC, EDC?
Yeah, Chandan, could you help on that?
1 second. So PVC EDC is traded at $522 per metric ton currently.
And VCM?
And PVC to VCM, it's 151.
Also, could you give us the pricing, sir?
Sorry?
Also, could you give us the pricing? That would be better.
Pricing is around $870.
Understood.
Sorry, my bad, 708. Sorry, my bad. It's $700. $700.
Understood. So lastly, on the growth front, what would have been the growth in CPVC this particular quarter? And you also mentioned from July you're seeing a pickup. Is that more to do with the plumbing is what I'm, understanding? And if yes, could you give some color? Is it broad-based? Is it selective?
So current quarter, our CPVC volume has grown by 10%. So out of that, 6% contributed by pipe and 32% contributed by the fitting. So more or less the same increasing trend, growth trend of PVC we are going to see in the upcoming quarter as well.
That's helpful. Thanks a lot, team, and all the best.
Thank you.
Thank you. The next question comes from the line of Praveen Sahai from PL Capital. Please go ahead.
Yeah, thank you for opportunity, sir. First, what's your capacity in the pipe and fitting right now?
So in terms of our total capacity, 4,70,000 we were reporting earlier. Now, as I'm sitting on today's date, it's 4,50,000. Sorry, 5,20,000. So 4,00,000 out of 4,70,000, 25,000 we have added in March quarter and 25,000 we have added in the current quarter. So sitting on today's date, we have the total capacity of 5,20,000.
Right. Okay. Second question is related to the, gross margin, because as you said, you are integrated player and your gross margin more to do what I suppose is how is the spread is moving PVC EDC or PVC VCM. So sequentially, if I look at your spread for a PVC EDC has improved from 490 to 522. But in the same case, your gross margin has contracted. So is there any inventory loss you had booked for this quarter or why is it so?
No. So basically, if you see, we are managing our inventory effectively. So this quarter, fortunately, also we have not seen any inventory loss. This is number one. Number two, in terms of pricing margin, see, whenever you see the prices in the international market, these prices are the more or less indicator. When we see compare the landed prices and when it goes to the market, there are multiple factors also plays into picture. So that's why the cost front will remain more or less same in terms of number, but margin will also depend upon how the top line is going to pipe is getting sold in the market. So that is how our margins got impacted.
Okay, so there is a more contraction in the realization than the cost.
Yes.
Okay. Got it, sir. And sir, next question is related to the use of your, the cash, which is 2,500 odd crore. Is there any plan for a future?
Basically, Praveen, we will continue to expand the pipe capacity year after year. So typically a few hundred crores between 200 to 300 crores would be definitely spent every year in the expansion of pipes and fittings capacity. But in the meantime, we will also be adding to the cash reserve. So definitely if you take a 5-year span, we will have more cash reserve than what we would be using for expansion. So it's a question of timing, and again, as I said in the last call also, it's the board's decision that when we feel that we have adequate cash surplus which is not likely to be used by business, then we will return it to shareholders. But the timing, obviously, we cannot commit now.
All right, sir. Lastly, on the capex, for this year, you guided last quarter 125 to 150 crore. What exactly, now you are saying about 200, 300 odd crore of a capex annually you are looking for. So for this year, we can assume it's more like a 200, 300 odd crore of a capex you are going to do.
Additionally, maybe another 150 crores.
No, so 150 crore for this year you are saying?
Yeah.
Okay. Thank you, sir. Thank you. All the best.
Thank you. The next question comes from the line of Udit from Yes Securities. Please go ahead.
Yes, sir. Thank you for taking up my question. So just one follow-up. In the last call, you mentioned that the focus of the company now remains on margins. I understand that this was a tough June. overall, and that must have dragged your overall performance. But, overall, if you had no inventory losses, then also the margins are very much suppressed.
Yeah, but margins are obvious, also a factor of, because the top line, the expenses remaining the same and the top line coming down. So obviously absorption of fixed costs plays a role. But having said that, what we mentioned in the last quarter holds good, that some of the incentive schemes, some of the discounting schemes which we had done in the past, we have started withdrawing, and we have definitely managed to knock in a few percentage points in the absolute gross margins in the pipes business, and that will continue. Obviously, this is not the right time during monsoon to be very adventurous, but once the demand picks up post-monsoon, we will carry this further.
Right, sir. So just, actually that is what one is, that you withdraw the discounting. But in terms of your agri, non-agri mix on annualized basis, how do you see internally that shifting? Because otherwise those margins without the volumes may also not suffice the target, right?
So that will definitely come, because we have, as we have in our opening remarks, we have said our emphasis is already going on regarding the making the mix to the better level at the 50-50 level. But since we are at the first quarter conclusion only, let's see how the thing is moving. But yes, our emphasis and our endeavor is also to make it to the extent possible 50-50 over the period to come. And that will give us the margin, because as the non-agri will go up, that will give us the margin push as well.
Hello, Udit sir, we are unable to hear you.
That's it from my end. Sorry. Thank you.
Thank you.
Thank you. Thank you.
Thank you.
The next question comes from the line of Shiv Kumar Prajapati from Ambit Investment Advisors. Please go ahead.
Yeah, hi sir. Thanks for having my question. My first question is, what is our current share from fitting? I mean, the revenue share from fitting.
See, Shivam, generally we do not give our breakup between pipe and fitting. So overall ratio, agri and non-agri remains 70-30, but that number we do not disclose.
Understood. Okay. And sir, would you be able to provide me the breakdown of the non-agro revenue? I mean, just want to understand whether the non-agri revenue comes from plumbing, construction or industrial.
So in terms of our total revenue, non-agri somewhere comprises of 460 crore roughly around.
Okay, and this 460, would you be able to break it down further?
No, that won't be able to disclose that number.
Okay, and is there any breakup available for retail versus the institutional?
No. That general detail we do not discuss in the market generally. Though we have tracking the number, but though this was a management use.
Understood, sir. That's it from my end. Thank you.
Thank you. The next question comes from the line of Vishal Shah from Samiksha Capital. Please go ahead.
Am I audible?
Yes, sir.
Yeah. So, as Mr. Agrawal will join 2 months later, so what are the key strategic priorities and immediate goals? So, Mr. Dhanorkar will transfer. So, in the near term.
So there is some background noise. Somebody is talking. I didn't get your question. Yeah. Can you please repeat the question? Somebody else was talking.
Am I audible?
Yeah.
Yes.
But there's somebody else talking. Right.
There is some background noise from your side.
Yeah, Vishal, you can continue, please. You can repeat your question, please.
Yeah. So, what are the key strategic priorities and the immediate goals for the Mr. Agrawal? So, as we will join the MD in the coming 2 to 3 months, so as Mr. Dhanorkar will be there only, but whether we can expect any change in the stance from the company or any policy?
See, policies will remain the same because policy is not dependent on the person. It is as a corporate, and that's why we are a very, very well-defined board-driven company. Our independent directors are very actively involved in the strategy and planning. So whether it is Saurabh Dhangarkar or Udit Agarwal, that will not change the overall strategy. But for him, I would say the immediate KRAs would be the looking at the market expansion, market penetration. To some extent, why I would not like to have a long full-time role in this, because the way the market dynamics go today, the person at the helm has to travel extensively. I'm sure with his younger age, Udit will be able to reach out to every corner of India, meet the distributors, understand their pinpoints, and basically make the marketing network robust. As far as the manufacturing concerned, we already have a solid team in place. That's not a thing. And again, the expansion, he would be involved in executing this. As I said, although we have not declared the numbers, he would continue to expand the pipes capacity. So one of his KRAs would be also to see that the expansion happens in time, at the right location, and the products get distributed properly.
Thank you. I think that's it from my side.
Thank you. The next question comes from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Couple of questions. Sir, first is just wanted to understand on Nal Se Jal, is there any offtake happening with respect to the scheme, given there were some corruption related issues on the tendering? Specifically, if you can give some color in the state of Maharashtra also, that would be great. And do we also supply under Nal Se Jal directly or indirectly by contractors?
No, we don't supply anything directly. It's all through contractors. And I don't know what this corruption related issues, but we are not directly, indirectly, even remotely affected by that. Because if at all something happened at a government level, I'm sure somebody must have been involved. But for us, we have not seen even the slightest impact of any corruption there.
And sir, how is the offtake with respect to this particular scheme? Is it quite normal, or is it improved on a year-on-year basis or last 3-month rolling basis?
See, again, as I said, we supply to many of these schemes through our distributors, and they pick up the pipes from us as normal purchases, and then they supply to various, because these schemes happen across the state, in smaller villages, in smaller amounts also. Some of them are as low as 1 or 2 lakhs, some of them maybe 5 lakhs, 10 lakhs. So to be honest, we don't track each scheme individually at our level. But what we understand from the retail network is that there is not a great surge as of now this year. Probably that will come only post-monsoon. So the normal pickup is going on. There's no lull in that purchase.
Sure, sir. Sir, my second question is, we have indicated that we will have only one segmental number. So to what I understood, I think earlier we had this logistic cost savings specifically for the Baroda plant, wherein we didn't have to move resin all the way from Ratnagiri to Baroda. So when we say that we won't have any external sales, is it we are implying that we are okay to bear a higher inbound freight cost even if it impacts profitability?
No, but even today for Baroda plant, we are buying from Reliance. It's an outside basis. So we are not transferring from Ratnagiri. So today the Ratnagiri production, as you know, is of the capacity is little over 2 lakh tons, whereas our pipe capacity is now more than 4 lakh tons, so the consumption more than 4 lakh tons. So in any case, we have to buy. So there is no question of whether we incur more freight, and it doesn't go from Ratnagiri. Now we are buying from Reliance for Baroda plant.
Sure, sir. This is helpful. Yeah. Thank you. Thank you so much, sir. Thank you.
Thank you. The next question comes from the line of Shravan S. from Dolat Capital. Please go ahead.
Hi, sir. Sir, just to clarify, when we said the capex of 150 crore, how much already we have done in Q1, and how much more we will be doing in the remaining 9 months?
So at this moment, that number is still order has been started to place. So over the period that will be able to materialize. But as of now, the order we have started to place roughly around 30-40 crore already in place.
So Q1 we have done cash capex of 30-40 odd crore.
Order, not actually conversion, it's a order placement only.
Okay, so for full year in terms of the cash capex, it would be a 150 odd crore. That's the way one can look at.
Yeah.
Okay, but going forward, as you mentioned, it would be a 200-300 crore kind of a capex from next year onwards one can look at.
Yeah, so that will include our existing replacement capitalization plus the enhancement of capacity both.
So currently, as you said, we have a 520,000 capacity. So here further, is there any capacity that will be coming up? And if not, in next year, how much more, whatever way brownfield, how much more capacity we will be adding?
See, basically, exact numbers we cannot give without the board decision. But as I stated earlier, the market is growing. We definitely have plans to have a double-digit growth over the next 5 years, which means we will need to expand capacity. And that is, since we have the funds available, since we have the market available, we will continue to expand. But exact numbers today, unfortunately, we cannot share because that is still under planning.
Okay, got it. But whatever the capacity right now we are looking at, but this year definitely we will not be adding any capacity.
So this year, towards the end, yeah, we will have some of it. But as I said, it's not finalized as yet. But as I said, this quarter we are implementing the earlier 50,000, out of which 25,000 already happened before March. 25,000 is happening right now, and we still have 9 months to go. So by that time, we will have some more capacity.
And then now whatever we will be
150 crores.
Yeah, no, I understood. But now onwards, whatever we will be adding, so leave apart this 25,000, that will be mostly only in the pipes. And are we also thinking to add capacity in fittings?
No, it will be mainly in pipes.
So trying to understand when we for last, I think I don't remember if you can help me. Since I think many quarters we are saying that we want to have a 50-50 agri non-agri share. So how we will be achieving this if we will not be adding a fitting capacity? How, because this agri share is already it is around 70% for last many quarters, 65-70 odd %. So to reduce that share and to increase the non-agri, how that is possible?
Fittings, because today we already have adequate capacity to go through this year. I am not saying we are not going to add fitting capacity at all. This year there is no capacity because we already have over 50,000 tons of capacity, and last year's fitting sales was about 39, between 35 to 40,000 tons. So we have adequate capacity to take care of the growth for the current year. Next year will be another year, definitely. By that time, we will have something.
Okay. And in CPVC also, are we adding capacity?
CPVC also, yeah, we'll keep on adding.
Okay. And for industry, for this year, as you mentioned that we are looking at a double-digit growth for next 5 years. So this year also, are we looking at kind of a 10% kind of a growth?
Definitely, target is definitely about 10%. Definitely, our internal target with our dealers, everything is there. And as I said already, as of today, we are high single digit. So as the market picks up, there's a good chance we'll cross 10%.
No, for us, definitely, but for industry, I'm talking for industry growth this year, how we are looking at industry growth?
Industry also should be close to double digit.
And there also, as you mentioned, the CPVC will also be growing at a double digit 10% odd. and PVC will. So both will be growing in tandem.
That's what we are expecting.
Okay. And lastly, sir, whenever last time we said whenever the ADD will come, whether it will come in October, September, whatever, we said that if in terms of the price hike, 3 to 6 odd rupees. So that's the way one can look at, or has anything changed, or is it a?
No, the expectations are similar.
But do we believe that this 3-6 rupees kind of a price hike can push the channel to fill the inventory and then can help us in terms of the growth, or is it whether this will be a 2 rupee hike or a 6 rupee, it will not have an impact? The growth will be in any way coming a kind of a double digit.
I think channel inventory, channel picking up is a temporary phenomenon. When they go down maybe for a couple of months, 3 months, 4 months. Finally, at the end of the day, it's how much the market grows by, because the channel is not going to keep the inventory for months together. So if the market is growing, the channel will be picking up. Whether they pick up in 15 days or whether they pick up the same quantity over 1.5 months, that's what the price movements decide. So if you look at quarter to quarter, yes, whether that growth will come in this quarter or the next quarter. But if you look at annual this, there definitely will be growth.
Okay. Got it, sir. Thank you and all the best.
Thank you.
Thank you. Before we move towards the next question, we would like to remind participants, you may press star and 1 to ask a question. The next question comes from the line of Vipul Kumar Anupchand Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is Mr. Chhabria, our chairman, and is he actively involved in day-to-day management of the company and guiding the company strategically, because he is absent on the call for so many years and company's performance is also not up to the mark. So are we losing any market share? So, Mr. Dhanurkar, can you make some comments regarding the strategic role Mr. Chhabria plays?
Yeah, he is definitely involved in not only the strategy, of course he is involved as the chairman. Plus, as I said, we have a very, very active independent directors on our board who engage with us not only from board meeting to board meeting, but also in between we have regular sessions, chairman and the board and the CEO and our HODs we have there. As far as Mr. Chhabria is concerned, we have regular online meetings with him, so he's involved in all major decisions like capex and this. But day-to-day, obviously, he doesn't get into that. Day-to-day is left to the MD and HODs. So that way, we are a fairly professionally run company with a promoter who is actively monitoring.
No, but because the churn at the top is very high, sir. And so even before you took over, and the performance of the company has also been less inspiring. Have we lost any market share over last few years, sir?
See, market share obviously is a moving target. To some extent, yes, some of the competitors have expanded after their public issues or whatever. So that changes from year to year, but that has nothing to do with the chairman being present on the conference call or on the analyst call. He is involved in the decision making. He is very much involved in the board decisions. And if at all there is a dip in the performance, it is market driven or probably the team has to take the blame. It has nothing to do with the chairman.
Okay, sir. Sir, can you comment on the difference between margins for fittings and pipes? So naturally, fittings will have a higher margin. So if you cannot quantify, but directionally they are much higher than pipes?
Yeah, directionally they are much higher than pipes, definitely.
Okay. Thank you, sir.
Thank you.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and one. The last question for the day comes from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, sir. Firstly, I want to know how are the CPVC prices, and secondly, the growth you have indicated in CPVC for Q1 double digits. So whether you have gained market share or the market demand was healthy?
Yeah, the CPVC prices have been on the decline of late. If you compare to last year, we have got benefits. More CPVC capacity is coming up this year, and by end of next year we'll have more capacity. More players are coming into India. So the availability of CPVC has increased. Correspondingly, the prices have come down, and we expect them to come down further. And with CPVC becoming more affordable to the customers, the volume is growing. What we have grown to some extent, I believe, is that yes, we have taken some market share. We have grown more than the market. But having said that, we expect the overall market for CPVC to grow in line with the plumbing market. So it's not just CPVC, the overall plumbing market is growing. CPVC as part of that is probably growing faster because the base is smaller, and we are growing slightly ahead of the industry. That's the scenario.
Got it. And what is your, secondly, the CPVC prices have declined, so it is because of a cost pass-through or whether the margin have also taken a hit? Secondly, what is your CPVC revenue and volume for this quarter?
No, I'll just, on the first part, I'll say that CPVC resin prices have declined, but correspondingly our sales prices have not declined. So in fact, the margins in CPVC are better compared to last year. But having said that, the numbers, I don't know, Chandra, do you have them handy?
So we have the total 6% share of CPVC in our overall volume.
Okay, understood, got it. And what was the CPVC growth in July month, which you said for the company was high single digit? Is it?
We are wrapping up the number, so we'll not be able to comment at this moment. We are just wrapping up July.
Got it. And sir, on PVC side, how has been the channel inventory for the company maybe on March versus June versus July? How has it changed? And what is your possibly normal channel inventory? How is it now? What is the sense? Possibly can channel inventory bring a strong growth for a quarter if that get normalized?
See, channel inventory has been right for the last few months has been low because the channel inventory, as we discussed earlier, picks up when there is a anticipation of price increases, and they tend to stock more. So that will really depend on how the international PVC prices move over the next 2 months, depending on also the sentiment relating to anti-dumping duty. So very difficult to predict to when the market, but since this is a monsoon period, we don't really see a surge in this channel inventory pickup during this month. But as we come towards the end of monsoon, by end of August or early September, September should be definitely a much better month. So by that time they will be very low on inventory, and as the demand comes up, the channel inventory will pick up.
Okay, got it. So one last question from my side, sir. So the excess cash which is there in the balance sheet, which has been discussed multiple times, so but there is still no clear roadmap missing, possibly whether the company won't be using, why it is not distributing to the shareholders.
Yeah, but unfortunately I don't have an answer for that because this is a decision taken at the board level, and as I said, we are, as management, we are aware that yes, we are holding the shareholders' money in trust, and if we don't utilize it effectively for business, it would be proper to return it to the shareholders. But unfortunately, I can't place any timeline on this.
Got it. That is helpful. Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to management for closing comments. Thank you, and over to you, sir.
Thank you, Arun. Thank you all for attending today's call. And if you have any further questions, we'll be most happy. You can get in touch with us through mail or through call to Mr. Chandan Verma. Thanks once again. Have a wonderful day.
Thank you all. Thank you for your active participation. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.